Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028201. He is a gentleman. He is a scholar. He is
Tyler Cralle.
So today was kind of like a normal day. We had some economic reports. We had a little bit of bond movement. Not a lot, but it's been a lot of kind of like big stories that I think sort of go well beyond the bond market. Whether it's, disruptions in geopolitical worlds and the president going after the Fed chair and directing Fannie and Freddie to buy bonds. So these are like big stories that, like I said, kind of go beyond the mortgage world. And it's kind of nice that we just have sort of like a normal day where nothing's really going on. It's like a normal day. It's like economic data and bond market reactions. Welcome, everyone, to the Tuesday edition of Wilmington Mortgage. I am the aforementioned host of this podcast, Tyler Cralle, of course, loan officer, Town Bank Mortgage, right here, Wilmington, North Carolina, where we break down the stories that are impacting mortgage rates right here in Wilmington. And we will do it today in 15 minutes or less. We might even be able to do it in 10 minutes or less, in all honesty, because today is, well, it kind of speaks for itself for the most part. So we got some inflation data, and then we got new home sales. And there's still some lingering impacts of, like I said, the president's announcement about Fannie and Freddie to buy bonds. And then, of course, the DOJ opening investigation into Jerome Powell. So those are out there. There's no doubt about that. But today, it was all about inflation. And I was a little worried that the announcement of the DOJ going after Powell was going to kind of overshadow the inflation report. And it really didn't. The reason we didn't see a lot of movement in bonds today was because the inflation report was not all that surprising or was not really impactful in that we didn't see really a lot of movement there. So just to give you a heads up, we did see the 10-year fall about 1 basis point. So the 10-year closed like right around 4.17%. We also saw, and then we saw Mortgage News Daily, their 30-year fixed rate sort of index, had the 30-year jumping about 5 basis points. But that was not because of the inflation data or new home sales. It was pretty much entirely because of just sort of a lag with the president's announcement on Thursday and then the DOJ announcement on Sunday night. And it's, you saw it in rates. You kind of saw the way companies were quoting rates. I was looking at what we were working with. And so then it takes a little longer for something like Mortgage News Daily to kind of get the impact of those stories. So I think that was more of a lingering effect from those stories than it was the CPI report. Because like I said, the CPI wasn't really that fascinating. Core inflation unexpectedly held steady to close out 2025. And like I said, it was a pretty good report. The only concerning thing is that we're seeing kind of like a leveling off, like things kind of holding steady. But the problem is that we're still too high with regards to the year over year number. So consumer price growth was unchanged in December. According to the latest data from the Bureau of Labor Statistics, inflation appears stable, but like I said, remains kind of well above that 2% target. Prices rose 0.3% in December. That was matching the last report that we have. So we did not get monthly data for October or November. So September was the last report that we had, which was also 0.3%. So that's the last report that we have to look at. Economists were expecting that 0.3% rise, so nothing surprising there. Year-over-year basis, inflation held at 2.7%, unchanged from November. We did actually get year-over-year data in November. And so now in 4 of the last 6 months, the year-over-year number has held at 2.7. Like it kind of jumped up, I think, in August and September. Then it fell back down in November, and then we closed out the year at 2.7%. So, we have core inflation, which of course removes the volatile items such as food and energy. And food and energy were a little volatile this month. Food prices, big jump, 0.7% jump in December. Big. I mean, if you annualize that, so what is that? That's 8.4%. That's a lot. So that was a big jump in December. This pushed the annual food inflation up. So year over year, 3.1%. That's the highest level since September. And that 0.7% jump for the month was the biggest monthly jump since October 2022. So I don't know what's going on with food because, I would say what I've seen in the grocery store recently, we did see some price hikes. And maybe there's a lag effect with CPI. That's always been one of the criticisms of CPI is there is sort of that lag there. That it seems like things have been getting a little better. They did sort of spike, I would say maybe in fall. But it does seem like things have gotten a little better. But, 0.7. That's kind of big. Energy prices rose just 0.3% for the month. That was the slowest monthly increase since July and pulled the year-over-year inflation down to 2.3%. That's the lowest level since August. So a little bit of movement there in both categories. Energy coming down a little bit, even though we did see prices rise, year-over-year fell. And then big jump month-over-month for food, but kind of just a little rise there for the annual data. And then core inflation, which is really kind of the big category that economists like to look at. Core prices increased just 0.2%. So that was down from the 0.3% that economists were forecasting. So we did see a little beat there. Annual core inflation held at 2.6%, which was defying expectations of a rise to 2.7%. So on its face, like I said, not awful, showing some stability, some steadiness. But the problem is we're seeing that at 2.7%. The Fed target rate is 2%. And, when you're talking about that low of a percent, to be almost a full percent higher, I mean, that would be a 50%. You'd be 50% above the target. So what is that? That's like 30-something percent above target. That's somewhat of an issue, no doubt. And then also surprisingly, mostly because, you look at what's happening with rents, you look at what's happening with home prices, and you're seeing definitely a slowdown, if not somewhat of a pullback. They had shelter costs jumping 0.4% in December. That was the biggest monthly increase since August. And on a year-over-year basis, shelter inflation actually rose to 3.2% from 3% in November. And that was the first time the annual index had risen since March 2023. That's when it hit like 9%. And then since then, like every month, it's fallen like 0.1% to finally get to 3. And then this is the first increase in that annual index since, like I said, 23, March 23. So that's a little surprising there. So yeah, I mean, that's sort of the takeaway from the report is that, we saw a little downward tick in the 10-year. Like I said, the 30-year was up, I think, for reasons not related to the CPI. But there's a little concern there. You're seeing it from bond investors where they're like, we're glad that we're seeing sort of a leveling off and there's not a lot of volatility, but, we're leveling off at kind of a high level. I think if we were at like 2.4, 2.5, we might see a little bit more downward movement in the 10-year. But because of that, I think they're like, we're still at a level that we're not extremely happy with. So it was a good report, but caution flags is sort of where we are with inflation data. That was not the only report. As I mentioned, we also got new home sales data and whoa, baby, the South. So new home sales, surprisingly, actually held firm in October, defying expectations of a pullback, probably, I would think, because of lower rates. New construction remains a key pressure valve for the housing market, as existing home sales, of course, both having their issues in this last year. Sales of new single-family homes were running at a seasonally adjusted annual rate of $737,000 in October, essentially unchanged from September. I think it was at 738. So 738,000 dropped to 737. That's basically unchanged. And just a reminder, that is the strongest pace since May 2023. So just to remind you that we already had a good month in November. September. This report is pulled back. This is October that we are talking about here. So we had a really good September, pushing it up to almost a 3-year high, or, a little bit over 2-year high. And then showing it's not a fluke. It was not an anomaly. It's holding on at that level. Economists were actually expecting it to slip to 720,000. Obviously, that did not happen. Inventory also held steady, 488,000 homes, unchanged from what we saw in September. At the current sales pace, that represents a 7.9-month supply, which is well below the 9.3-month supply that we had in October 2024. So some good news from the new home sales sector. Here's what's fascinating, though. This is all because of the South. The South jumped 16.9%, and which, by the way, the South is such a large percentage. 513,000 annual rate is where we are. So do the math. 513 divided by 7. That's almost 60%. Wait, no, hold on. Actually, hold on. I think it's almost 70%. I'm going to do the math. I would do it in my head, but I'm not that smart. Sorry, 70%. 69.6. We can round that up to 70%. 70% of all new home sales happening in the South. And just to highlight that, so the fact is that we actually saw an increase, or pretty much things were unchanged. Every other region fell, and in some cases collapsed. For example, the West fell 36% in October. Northeast was down 14.3%, and the Midwest was down 9%. So those are pretty big drops, and we saw no change because of the South. A reminder, the 10-year Treasury dipped below 4% in October for the first time since 2024, which no doubt was pushing down rates, which probably helped new home sales. So if you're wondering what's going on, there's your reason. And then, of course, I've talked about it before here on the program. Builders, do have these sort of incredibly low rates. Now, of course, it's not for free. Nothing's free in this world. And they usually do that by sort of propping up the home price and then taking that money and then dropping your rate. And so there's a way they do it. And there's a great article in the Wall Street Journal about it. And, it's not illegal. But it's, that's how they do it. Everyone's like, oh man, this builder's giving me like a 4% rate. And, rates are at like 7. And it's like, well, how do you think they're doing that? You think they're not making money? They a communist? Socialist? Communist? That's from Entourage, if you haven't seen the show. You communist? You socialist? They teach you that at Pizza U? For those that have seen the show, you'll get it. If you're not, you have no idea what I'm talking about. And so, yeah, I think that's why is you're seeing that drop in rates, and that sort of coincided with new home sales already doing well, and I think that just sort of kept them at that high level. And of course, the South just continuing to kill it. Everyone wants to live in the South, and I don't blame them. It's awesome here, no doubt about it. But yeah, not a lot of movement rates. Kind of a normal day, kind of fun. And I told you I was going to do it in less than 15 minutes. We were a little bit under. But you guys enjoy your Wednesday, and we'll be back on Wednesday for another edition. We got retail sales and PPI, so we'll be talking about that tomorrow. You guys enjoy the rest of your Tuesday. Enjoy your Wednesday. We'll be back here for another edition of Wilmington Mortgage. And remember, as always, do not wait to buy real estate. You buy real estate and wait.